Hey guys, Crypto here with a new YouTube video. This one was relatively unplanned. I just released my last YouTube video a few days ago. If you guys haven't watched it yet, I recommend giving it a watch as this new video does pertain to it. So it's good to have kind of a background going into this new video. The last video was quite long, so I'm going to play a small clip from that video. It's about 30 to 40 seconds long to kind of segue into this new video. But again, if you haven't seen that first video or after watching this one, I recommend watching that one because they do relate to each other, and that one's a lot longer and offers a lot more context. But for those that have seen that video that I published a few days ago, this one's going to follow up on that. A lot of you guys saw that video. A lot of you guys understand the concept that I was explaining, but I got a follower that asked me a question as a follow-up after watching this video, and I thought that the question was actually a very, very good one. He brought to my attention another example in history from a different market that basically mirrors what we're seeing today and mirrors the scenario that I mapped out in this last video. As I was typing a response out to him, I thought, you know what? This would actually make for a fantastic YouTube video where I can actually break down my response in a little bit more depth and where you guys can all see it because it pertains directly to, again, the last video that I made and offers some credence as to how the scenario that I described not only is realistic, but how we've seen this exact scenario play out in other markets in the past. So let's go ahead and dive right into it, guys. This is the question that I got asked from Marco. If you have time, what do you think about the concept of the roaring 20s? According to this concept, we would roughly be at the circled point, and after the fifth wave, we would see a rather shallow bear market with a lot of sideways movement before another raging bull market and a major crash at the end of the decade. So what Marco, I think, is referring to is the suggestion that we are currently in the circled area right here. This is a chart of the Dow Jones Industrial Average going back to 1915 all the way to 1941. And of course, we know that the 1920s were known as the Roaring 20s, basically a period in which we saw, the markets going essentially parabolic. And what followed was the Great Depression of the 1930s. And in the Great Depression, we saw the biggest Wall Street crash that we had seen up until this point. And that is why it was called the Great Depression. Now, this comparison that he's marked off is significant. I'm going to argue that we're not exactly in this area that he has circled, but this is a beautiful chart. And I want to talk about this because I wasn't actually aware of this example when I made the last video that I made, but this example almost perfectly demonstrates the exact type of scenario that I described in the last video. So coincidentally, it was brought to my attention now. I hadn't actually seen this chart before, this actual fractal of the Roaring 20s and the Great Depression that followed, but it mirrors almost exactly what we're seeing today in terms of structure on Bitcoin and where I think we're headed. So I'm going to break this down and let's just jump right into it, guys. Before I jump into this exact chart, I'm going to play a 40-second clip from the last YouTube video that I published a few days ago that goes into this thesis in a lot more depth. With that being said, I'm going to play a small clip from that video, then we're going to jump right into the charts.
I would imagine that when Bitcoin does peak here at 100K plus and we start correcting down, I think buyers are probably going to step in at levels like 60K, thinking, well, it's only 1 year into this 4-year cycle where we've got to be going higher. And I think buyers are going to start stepping in at 60K. I think we might see buyers step in at this level here at around 30K, thinking this is just the beginning of a much larger 4-year cycle. So why are we not buying the dip? I think what's ultimately going to happen is that these levels are going to be pushed through, trapping a lot of buyers to the upside as we break down and see back to sub 14K, which I don't think many are expecting after this first move to the upside. Again, I think a lot of people are going to get trapped here, but for those that are patient enough, I think they'll be handsomely rewarded with a move down back under our current lows that we put in, which is around 15K, back to the 9-10K region, potentially even lower.
All right, guys, so in that video, we talked about how in that video, we expected to see another 5-wave impulse to the upside, after which I expected us to ultimately see, a major bear market that would fully retrace this move, right, back to sub 15K levels. Now, obviously, since that video, we're seeing that impulse play out. We are almost to the end of it. We have the final fifth and really the strongest leg left in this impulse, meaning, again, as I've previously said in many videos, you expect the rate of ascent on this final fifth leg to be even more aggressive than what we saw on this third leg. But in other words, I do think that we're headed for a blow off top here. Following that, I think we're going to see a big crash that takes us back to sub 15K. Now, many people saw this and said that's ridiculous. That doesn't make any sense for us to fall that low after such a move. There's no precedent for something like this happening. That would break a bunch of structure. And again, in that video, I talk about this in much more detail and explain as to why this is actually quite realistic. So I won't go into too much depth in that. But let's go ahead and take a look at the chart of the Dow Jones Industrial Average, because that chart shows us an exact moment in history where we had very, very similar price action to what I think we're going to be seeing here in the coming years on Bitcoin. And I think that this scenario that we're going to see play out on Bitcoin will mirror relatively the type of PA that we saw during this period in the Dow Jones Industrial Average. So let's go ahead and jump right into that. All right, guys, so here is the chart again that was shared by Marco when he asked this question. Recall that Marco was asking if we were currently in the circled region here before what he's saying is this fifth leg to the upside. He then said he believed that we would see a bear market before a final bull market and then a major correction. Now I'm going to take this same chart and I've actually marked it off with my notes, and we can compare the two, or we can see where I think we actually are in this cycle and how it relates to the video that I just shared with you guys and the clip that I just shared with you guys. So this is now the chart actually with my markings on it. I saw this and I said, this is perfect. This is exactly the type of price action, the type of a cycle that I was demonstrating in that last video that I mentioned. Let me go ahead and break it down for you guys. So first off, I don't actually believe that we're in the circle region. I believe that we're actually here in this major fourth. Now, Marco pointed out that this is actually another beautiful example of why these things work and the type of structure that we're looking for. You can actually see here, if you look closely in this third wave, you can see again a very, very clear 5-wave subdivision. You have the first leg up here, you have a correction right here, that's a second leg. You have the third leg here, you have the fourth leg right here, another correction, and you have the final fifth. The same thing is taking place on a larger scale here, where you have the first wave up, you have the wave 2 correction. This 5-wave move makes up the third wave. You have the wave 4th correction, and then you have the major 5th. And again, this is exactly where we are today. Marco pointed out us being in this 4th subwave of this third, and I've said again that I believe we're in the 4th subwave of this much larger 5-wave move, right? So Marco has the right idea in that, yeah, we are in a 4th subwave, but I think we're in a 4th subwave of a larger degree. And so now going back to our chart today real quick, what that looks like again, Marco is pointing out this area here, and I'm pointing out that we're actually in this area here. So again, very similar structurally to what we're seeing here. In fact, this is actually pretty wild, guys. I'm going to copy paste that image here because it's so clean and so clear. Let's just go ahead and compare these, okay? This is akin to our 15K bottom right here, okay? The start of this 5-leg move to the upside. 15K bottom, 15K bottom. The first wave up is akin to this first leg up to 31K. We then got our major wave 2 correction. That was our correction down to 25K. We then got our major third wave correction, and that is a leg that completed here at 75K. We're now working on the major 4th wave correction, and that is a correction that thus far has gone down to around 53K. And what's coming next once this 4th wave completes is that final 5th wave blow off top to 100K plus. You can see that's mirrored here almost perfectly. And you can actually even see the 5-wave subdivisions that we have here on the third leg. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. And so Marco again pointed out that this was a 4th subwave. And I just want to be very clear. I'm saying that we are in this larger 4th subwave. As you can see here, we've completed the first already. We've completed the second already. This third is already actually complete. We're currently working on the major 4th. And what's next is this major 5th, which will also have a pretty clear 5-wave subdivision, very similar to what we are seeing here, or what we saw here, I should say, on the Dow Jones. Again, this is exactly what I'm talking about. These charts look very similar. Now you can see here in the same way that we had a parabolic blow off top here in the Dow Jones Industrial Average, what followed was a mega crash, mega correction that actually went below these lows here at 15K. And again, this is what the entire last video that I made argued, that this move, despite how beautiful and aggressive it looks, if we're going to get a parabolic blow off top and we're going to see an ascension that is something like we have never seen before in terms of aggression to the upside, or something that we haven't seen since 15K, if we get that sort of an aggressive move to the upside, what follows is going to be a large crash. And I've argued as to why that crash makes sense to go back below 15K. And for those who say that there's no precedent for that out there, for something like that to happen, or that that's never happened in history, or that such a correction makes no sense, this is a perfect example. We can see here that following the blow off top in the 1920s, the roaring 20s, we then saw a correction that actually went back below the origin of this impulse, right? This correction took the Dow Jones Industrial Average all the way back down, retraced this move completely, and we didn't actually make new all-time highs for another 30 years, okay? Now again, the time aspect here is a little bit different, okay? Of course, the Dow Jones Industrial Average bottomed in the 1920s here. That was the start of this 5-wave impulse to the upside. It ended up topping around 10 years later, and then we saw this major correction. Now, Bitcoin has done this 5th wave in a matter of a couple of years. Okay, so the time scale of this drop in the traditional markets, it took about 3 years to make its way to the bottom. The time scale is different. Okay, and that doesn't matter because we see these sort of impulsive movements or these trends on different time scales. So in this case, I'm talking about the structure of this move. I'm not saying that it's going to take 30 years for Bitcoin to recover from this crash. That's not what I'm saying. Simply saying that the structure is similar and the depth and magnitude of these corrections should be similar is what I'm expecting. The recovery on Bitcoin, as I described in my last video, will not take 30 years, should not take 30 years, and don't expect it to take 30 years. It will be a very small fraction of that. But the structure here is the same. And for those that think that we can't fully retrace a move like this on Bitcoin, this is a perfect example of not only possible, but why it's a very, very real possibility to occur here. These things, these fractals, as I've previously said, this type of price action is not unique to Bitcoin. You can see impulsive and corrective price movements across all markets. And we see the same sort of boom and bust cycles across all markets. In my last video update, I compared it to a tech stock, Netflix. The idea is the same. It doesn't matter what the asset is. We see the same type of price action and cycles play out in every single asset. And every time you get a period of euphoria and absolute greed, that is followed by a period of depression or fear, right? It's just the way that the world works. It's just the way that these cycles work. There's always a return to equilibrium or return to normalcy. And that's simply what this is. When the market gets overheated for a period of time, it then sees a correction. Again, Bitcoin since inception has existed for 10 to 15 years. If you take the Dow Jones Industrial Average, we had 10 years of up-only price action. I don't think many saw such a massive correction coming, something that would wipe out 10 years of upwards price action. But it did, right? And that's, again, exactly why if you compare this and you kind of envision this as, okay, well, if we look at this in the scale of Bitcoin, the idea here is, again, this was the first major correction of the Dow Jones. But if you go ahead and just kind of compare these in the time perspective, imagine that Bitcoin was launched here, right? Bitcoin at this point has been alive or has existed now for 10 to 15 years, has a 10-year secular bull market, and then sees a major crash that wipes out all those gains. Again, that's something like what we're seeing here. Again, on a higher time frame, you have a 10-year secular bull market, and the correction that follows this 10-year secular bull market. Okay, I'm not saying that we're going to wipe out. I'm not saying that Bitcoin's going to go back under $4.87, but what I am saying is that the correction that follows such a secular bull market is greater in terms of both time and price than any of the smaller corrections that we saw on the way up. Okay, so if you then take the structure of this as a 5-wave move and the structure of this as a 5-wave move and extrapolate that to the higher time frames, you can also compare this move to this 5-wave move on the higher time frames, right? The first leg, the second leg, the third leg, the fourth leg, and now the fifth leg, with again the very clear 5-wave subdivisions. Again, these are now on a similar time scale, right, as what we saw here. And you can then say, well, this correction that we saw that followed it was more brutal than any of these prior mid-cycle corrections, right? Those being now this major 2 and this major 4. This final fifth wave that we see is either correcting this entire 5-wave move to the upside, which allows us to go below 14K and still be technically okay, or it's correcting this much larger 5-wave move to the upside, which opens the doors for us to see below 14 to 15K, even technically below 3K. Now, I've said I don't expect that to happen per se. My base case is I'm looking for a move down to 13 to 15K. I've showed you guys this comparison about how, nasty and aggressive this correction can be. I hope this kind of makes you guys think twice now about dismissing the idea that we can't see 14 to 15K Bitcoin again. I will also add, because I've been getting some people, asking questions about this, 2 kind of important things that I keep saying in questions when I made the last video in the comments. One is I keep hearing people say that such a crash is impossible because the cost of production of Bitcoin is too high. And we could never drop this low back to 10 to 14K because miners could not afford to mine Bitcoin at those prices and the network would then fail. For those of you who are not aware, Bitcoin has a difficulty adjustment built into the protocol, meaning that when price starts falling, at some point price falls enough to where the cost of production of Bitcoin is higher than the price of Bitcoin, right? At that point, it doesn't become profitable for miners to mine Bitcoin. So what happens? Miners capitulate. They turn their machines off because it no longer makes sense for them to mine Bitcoin. When enough of these miners capitulate, the difficulty of Bitcoin adjusts every 2 weeks, and it adjusts downwards, meaning it makes it cheaper to produce this Bitcoin. Because miners have capitulated, there's less people mining Bitcoin. So as the price falls, it becomes cheaper to produce Bitcoin, right? It's a self-regulating environment. The cost of production changes, it shifts constantly. Every 2 weeks, difficulty adjusts. And so there's not a situation in which price falls so low that the cost of production of Bitcoin is too high and the network fails. That's not how it works. As price falls, the cost of production falls with it as miners capitulate, and it finds an equilibrium at some point where it makes sense for miners to start their machines back up and continue to produce. And again, that's all that's going to happen if we get a major crash. You're going to get capitulation on miners. You're going to get a little bit more centralization in that the weakest miners are going to have to close their machines, and only the most efficient miners will stay in the game. And that will continue as long as price is falling until we reach some sort of a bottoming point where price stabilizes and difficulty is adjusted down enough to where it makes sense for miners to turn their machines back on and continue to mine Bitcoin. So there's no situation in which price falls so low that all the miners capitulate and the network fails because no one's mining Bitcoin. That's not how it works. The second misconception or second thing that I keep seeing is a lot of people are looking at Bitcoin's price as a function of fundamentals, as a function of something like maybe network addresses, or a function of the growth of the network in terms of usage, or all this data, these metrics that are like kind of hardcore data, and using this data to justify the growth of Bitcoin. I want to make something very, very clear here, guys. And this is something that you've probably seen with a lot of alts in the space too. The space in its current stage, and this doesn't just apply to Bitcoin, but applies to the entire space, crypto, altcoins, meme coins, fundamentally sound coins, everything. The space at this particular time, the price action that we're seeing, a majority of it is driven by speculation. Bitcoin may in the future be a store of value, but you cannot consider Bitcoin a store of value when it has this type of volatility. We've seen now 70 to 80% corrections to the downside. That's certainly not a store of value. Now, I think that Bitcoin has its place as a digital gold, but I think that it's not quite there yet. Okay, so there's a difference. When people say, how can you call Bitcoin a store of value when it falls 80% in 2 years? I agree with them. At this current stage, in its current life cycle, it's not a store of value. But I agree with others as well that one day it may be a store of value. One day this volatility will decrease, as it already is, and one day it will become a lot more stable, and it will have less volatility, it will have less variance, and at that point it may exist as a digital store of value. I mean, even gold today fluctuates, right? Every asset that we have fluctuates. Gold is considered a store of value despite the fact that the price doesn't stay stable, right? Gold actually fluctuates as well. It's just that it's a lot less volatile than something like Bitcoin. And I think that in time that will happen, but as it stands, Bitcoin is not a store of value. Bitcoin, like every other asset, goes through periods of fear and greed, boom and bust cycles, where speculation is the primary driver of price. Speculation that drives price way higher than it should be in a period of time, and then fear and greed and speculation that drives price way lower than it should be at any period of time. So to measure the movements of Bitcoin and say that it can solely be attributed to a variety of fundamental network statistics or network growth or this or that, I think is kind of ignoring the biggest factor in price action on Bitcoin and crypto as a whole today, which is speculation. And whenever you have speculation to this extent, you get periods of irrationality in both directions. You get periods of exuberance and excitement and euphoria, and you get periods of fear and depression and falling prices. And so I don't think you can necessarily measure Bitcoin and attribute its growth today to certain network metrics as the sole factor as to why Bitcoin's growing, and then extrapolate those metrics to the future and say that Bitcoin will continue on this path of growth for X amount of years because the metrics are growing at this rate or anything of that nature. I think that a big factor that is at play here is fear and greed and emotions and speculation. And speculation and fear and greed and emotions don't always make sense. You can't always attribute these moves to mathematics, because mathematics may be at play to some extent, but there's also a lot of irrationality at play here to a bigger extent, in my opinion, at this point in time. And so that's my argument for people that say that Bitcoin should continue up based on some mathematical formula because of these logical, mathematics. Not everything is going to make sense in markets, and markets, especially crypto, are prone to irrationality and things that simply don't make sense because emotions play a massive role in the markets. Speculation plays a massive role in these markets. So with that being said, guys, I went on a little bit of a rant there, but with that being said, let's go ahead and take a look at the Dow Jones Industrial Average and what followed this massive crash, because I want you guys to understand that this is not the end of Bitcoin, this is not the end of crypto, and I made that very clear in my last video as well. But let's go ahead and take a look at what I expect to follow this sort of a crash, if it were to occur, and what I expect in the future. All right, guys, so here is the chart of the Dow Jones with price history going back 100 years, and you can see this move here from the lows here to the highs here is actually the move that I just showed you guys, the parabolic impulsive move to the highs. And this move that followed that went below the lows was that major crash in the 1930s. This was the Great Depression. Just a few key points that I want to point out here. Following that major correction that we just saw, you can see what followed here is another cycle, another secular bull cycle that has lasted since the end of the 1930s, literally until today. Now, within this new secular bull cycle that has lasted for nearly a century at this point, you can see that we had what I've shown here as two major corrections, two major crashes within this cycle as well. And in between, we have periods of impulsive price action or trending price action to the upside. You can see here it increases like exponentially. So the scale's a little bit off here. So this looks a little strange, but what you do have here is a 5-wave impulse, or essentially another secular bull market following the last major crash that we had. And in this secular bull market, you can see that we had periods of impulsive price action, 1, 2, 3, 4, 5. You can actually break down the subdivisions here really nicely. A nice impulse to the upside. And then you had a correction. You had another 5-wave move to the upside, a correction. You have another 5-wave move to the upside. This particular 5-wave move to the upside looks very, very clean on the SPX. And the SPX and the Dow Jones kind of mirror each other. They're just different indexes, but they kind of move in tandem. So I've actually broken down this nice 5-wave impulse in previous Twitter charts as well. And actually I covered it in my last video. So that impulse that I covered in my last video on the SPX that had us retesting here and going to new highs, that's this right here, this little portion of the Dow Jones right here. Very, very similar looking, but you can actually break down the subdivisions on all these moves here, even though they look kind of messy. In any case, guys, the point that I'm trying to make here is following that major crash, what followed it was essentially thus far a 70+ year bull run, meaning a new secular bull market. Again, within that secular bull market, we had major corrections and major crashes, but the point is we had a macro uptrend again after this major crash. So essentially, guys, the point that I'm trying to make, and I talked about this in my last video update as well, was that following what I believe is going to be a massive crash on Bitcoin here, similar to what we saw here, the crash of the Great Depressions in the 1930s, moving back below, sub 14K on Bitcoin, which is again this level right here on the Dow Jones Industrial Average. What will follow that, in my opinion, is another secular bull run that should last far longer than 10 years. And that should take us to higher than what we put in as the peak in the coming years. So I'm talking about, 200, 300, 400, 500K Bitcoin. That will follow, in my opinion, this major crash. But again, I've talked more about this in my last YouTube video, guys. This video specifically was to compare current Bitcoin price action and what I think is going to happen in the coming months with this example of what we've seen here on the Dow Jones Industrial Average in the 1920s. So I hope this video was useful for you guys. I hope it kind of puts some more perspective into where I think that we're at in terms of our market cycle here on Bitcoin and where I think that we're headed. I hope this allows you guys to further, rationalize this move down to back to, sub 14K as a possibility, if not a possibility, quite a realistic scenario. And yeah, that's all I wanted to talk about in this video, guys. If you guys enjoyed it, please like, share, and subscribe. If you guys enjoy the content, let me know what you think in the comments as well, and I will catch you guys in the next one.